They helped create the market for the subprime mortgages in creating mortgage-backed securities. Again, this is the whole logic of the system, that no one is knowingly going to issue a bad mortgage or a mortgage that they have good reasons to think will go bad unless they could dump it on someone else. And the fact that you had the secondary market, Goldman being a big player, perhaps not the biggest player, but certainly one of the big players in the secondary market, buying up mortgages, putting them into mortgage-backed securities and selling them around the world. So they created the conditions under which you saw this massive explosion of subprime mortgages.
With regard to the notion of government sacks, they have been pervasively involved, including in the Obama administration, with former executives, former lobbyists, all throughout the Treasury, the Fed, the New York Fed, for a long time. On the other hand, Citibank, or they call now Citigroup, JP Morgan, and others have a pretty strong roster themselves, so I wouldn't single out Goldman Sachs. I would single out all the too-big-to-fail firms for this kind of government influence.
Well, it made good sense from Goldman's vantage point to repay the TARP money, because that was actually visible, it was very clear to see, and there actually were, some conditions, not much, but there were some conditions, some accountability attached to that. The other ways in which it got aid from the government, there's essentially no accountability. So, among other things, they borrowed $28 billion with a guarantee from the Federal Deposit Insurance Corporation, and they did this at a time when no one was lending. So that was a huge subsidy. They were able to basically get borrowing at interest rates that were just a little bit above what the government pays, because it's guaranteed by the government at a time when otherwise they probably wouldn't have been able to borrow at all. So $28 billion when no one else's money is worth an awful lot. They also got $13 billion handed to them through AIG, and the basic story here is that AIG is a bankrupt insurance company. It would have gone under. It was the day after Lehman collapsed. The decision was made by the Treasury and the Fed. They could not let AIG collapse in that context. They walked in with $170 billion and saved AIG. $13 billion of that $170 was just handed to Goldman Sachs. So that's a very big gift, and this is just an outright gift. The others were loans. That loans were very important at a time when no one else could get money. But in this case, they were just handed $13 billion. And if we'd let AIG go bankrupt, we just let the market work, Goldman's out of luck, because there's no way on earth AIG would be giving them that $13 billion. They would have been lucky to get 1/10 of that. They borrowed from the Fed's discount window and the Fed's special lending facilities. And this is really striking, because the Fed broke with normal procedures. They allowed Goldman Sachs to change its status. It had been an investment bank under the supervision of the Securities and Exchange Commission. In the middle of the crisis, they said on an emergency basis, we'll let you become a bank holding company. You're now under the protective wing of the Fed and the FDIC. That meant they had more access to Fed funds. How much they borrowed, we don't know, because there's no public record of that. So that, again, was a very big thing. They're now too big to fail, in the sense that everyone knows there is no way that Goldman Sachs is going to go under. If they make some bad bets, if they're betting on oil futures, betting elsewhere in financial markets, and those bets go bad, everyone understands the Fed will bail them out. They're not going to let there be another Lehman. Goldman, of course, being probably about 3 times the size of Lehman, there's no way on earth that the government would let Goldman fail. So what that means, if I'm an investor with 20, 30, 40 million to park somewhere, I look at Goldman, I know they're very, very safe, because the Fed, the government, is not going to let them fail. So those are the subsidies that it's getting. So it's nice that they paid back their $10 billion to TARP, but that was really just to take advantage of the other subsidies that there's really no accountability for.
With regard to the bonuses, there's a certain audacity of saying we're going to pay our guys $23 billion after they just got bailed out. If we hadn't done AIG, and if we'd stood back, I think it was a better than even money bet that Goldman Sachs would have gone bankrupt, just like Lehman did.
Just to take rough numbers, let's round up 20 billion, say that that's what they end up with at the end of the year, as their bonuses, because 16 billion after 3 quarters. So conservatively, we'll say 20 billion at the end of the year. We're looking at around 2 million foreclosures. So this would be enough to pay $10,000 for each foreclosure. So if we sent every homeowner who's facing a foreclosure a check of $10,000, probably the vast majority would be able to pay their mortgage. It wouldn't pay the full mortgage, but the gap between what they owe and what they could pay, $10,000 would cover it, I suspect, in the vast majority of cases.
Well, I think Matt Taibbi did them in. The vampire squid is probably the finest metaphor we've seen in this particular period of financial journalism, and even the Financial Times and Wall Street Journal refer to it every day.
Hey, hey, hey. Oh, no.